Namaste. Today we shall be learning about company accounts issue of debentures. What are debentures? Debenture is a word which has been derived from the word debere, a Latin word which means to borrow. So the word debenture is derived from the word debere in Latin, which means to borrow. So debenture is a document, a written document which acknowledges a debt raised by the company under the common seal of the company. So what do you mean by debenture? Debenture is the document which evidences debt raised by the company. Raised by the company under its common seal. Debenture is a document which evidences the debt raised by the company under its common seal. Please remember, it is a written document which evidences the debt raised by the company, which acknowledges the debt raised by the company under the common seal of the company. Please remember, common seal evidences the signature of a company. Now coming to next one, what is the nature of debenture? Debenture is a part of borrowed capital. Debenture is a part of borrowed capital. Debentures are the debts raised by the company. Therefore, debenture holder is a creditor to the company. Debentures carry a prefixed rate of interest. Prefixed rate of interest to be paid irrespective of the profits. Similarly, the principal amount also has to be repaid irrespective of the financial position of the company. So, debentures are the debt acknowledged by the company. Number 2, debentures are the borrowed funds. Debenture holder is the creditor of the company. Debentures carry a prefixed rate of interest to be paid irrespective of the profits of the business. Similarly, repayment of principal amount also should be done as and when the debenture falls due for maturity. And there is no restriction, there is no chance that the company can delay the payment because it is a part of borrowed funds. If there is a fault on the part of the company to pay either the principal amount or the interest component, the debenture holder has got every right to approach the court for the winding up of the company also. Now coming to next one, what are the differences between shares and debentures? We have completed company accounts issue of shares. Now we are going to company accounts issue of debentures. So you know pretty well that a shareholder is the real owner of the company. He is a residual owner of the company. Shareholder does not carry a prefixed rate of dividend. The dividend is payable only in the years of normal profits or high profits. And the repayment of the principal amount also is possible only after all settlement is being done. And for all these things, they are blessed with the right to manage the affairs of the company. They have the right to participate in the meetings of the company. They have the right to elect their representatives. The debenture holder is just the opposite of it. A debenture holder is a creditor to the company. The debentures are a part of borrowed funds. Debentures carry a prefixed rate of interest. Principal amount also has to be repaid as and when they fall due. Debenture holders are creditors to the company, therefore they have no right to participate in the meetings of the company, nor do they have a say in the election of board of directors in the annual general meeting. They will not be participating in the annual general meeting also. However, if the composition of debt in the total capital structure of the company is more the debenture holders can impose restrictions on the declaration of dividend. That clause is there. But on the whole, shareholders are the ultimate owners of the company. So the difference between debenture and share is a part of owners' funds, while debenture is a part of borrowed funds. Shares do not carry a prefixed rate of return on investment, while debentures carry a prefixed rate of return on investment. Shareholders are rewarded in the form of dividend, while debenture holder is rewarded in the form of interest. Shareholders have the right to participate in the meetings of the company and elect their representative to manage the affairs of the company, whereas debenture holders are mere creditors. Therefore, they do not have the right to participate in the meetings of the company nor elect any representative. Shares are not secured against any asset, while debentures are secured against the assets of the company. So these are the broad differences between shares and debentures. Now coming to one more difference, people generally get confused between debentures and bond. While debentures and bond share many similar features like interest is a prefixed amount, then principal amount will be repaid irrespective of the financial position of the company, etc. There are two basic differences between debentures and bonds. Debentures carry a prefixed rate of interest, while bonds no prefixed rate of interest. Sometimes the bonds are given at very heavy initial discount. The cumulative interest of it, if we calculate, that becomes the rate of interest also. Sometimes the bonds are issued even at 300% discount. For example, 1,000 rupees bond may be issued even at 300 rupees. The applicant will pay only 300 rupees, but he will get a maturity value of 1,000 rupees. So the difference between the price at which he purchased a bond and the amount that he gets back on maturity forms part of the interest. If we compute interest on compounded basis, we will get the rate of interest. So that is the basic difference between debenture and bond. Debentures carry a prefixed rate of interest, bond doesn't carry a prefixed rate of interest. Debentures are by and large issued by corporates, joint stock companies, while bonds by and large are issued by government and government mechanism. For example, treasury bills. Treasury bills are issued by Reserve Bank of India on behalf of the government of India. So these are the basic differences between bond and debentures. Now we shall be going to the next one is classification of debentures on various parameters. In that, the first one is we are going to talk about is security. On the basis of security, the debentures are broadly classified as secured debentures and unsecured debentures. What are secured debentures? They are secured against the assets of the company. They are secured against the assets of the company, which are called as charge. The charge can be broadly classified into fixed charge and floating charge. So, secured debentures are those debentures which are secured against the assets of the company, and that security is called as a charge. That means when debentures are issued, the company is creating a charge. Fine. The charge may be a fixed charge or a floating charge. What do you mean by fixed charge and what do you mean by floating charge? When the security is created on a specific asset, it is called as fixed charge. That means in the event of default on the part of the company to pay the interest commitment or the principal repayment, the debenture holder can demand for the realization of the particular asset which has been given as a security. Now again there are some threats. The market value of the particular asset which has been given as a security. Now the market prices are highly volatile. So in case if the market price of the particular asset which has been given as a security is fluctuating, again the company is in a financial risk. So the company would want to avoid all these things. So the company creates a charge on the assets of the company. It doesn't say any particular asset. So in the event of non-payment of principal amount or the interest commitment, the company will realize any asset by which the particular segment of debentures can be settled. That is what is called as floating charge. So I repeat, what do you mean by secured debentures? Secured debentures are those debentures which are secured against the assets of the company. So that creation of the security is called as creation of charge. The charge can be classified into two, fixed charge and floating charge. Fixed charge is when a charge is created against a particular fixed asset. So in the event of non-payment of principal or the interest commitment, the debenture holder can demand the company to realize that particular asset which has been given as a security to get settled of their demands or their commitments. But it is again risky because the market value of the asset which has been given as a security may vary. So in case if the company is able to realize the asset only at a price lesser than that, then it may have to look for alternative avenues of repayment. So the company in general creates only floating charge by which the debentures are secured against the assets of the company. So in case of default, the company might proceed with realizing any asset with which the debentures can be repaid. They are called as secured debentures. So what are unsecured debentures? Those debentures for which no security is attached are called as unsecured debentures. But please remember, in India, there are no debentures which can be unsecured. All debentures issued in India are secured debentures only. Coming to next one, on the basis of registration. Now, what do you mean by registration? Entering the name of the debenture holder in the index of members maintained by the company is called as registration. So, registered debentures are those debentures where the holder's name is entered in the index of members maintained by the company. Therefore, when the company makes payment of interest, it will go to that particular debenture holder directly. He need not come to the company to prove that he is the debenture holder. So, the amount of interest will be credited directly to the registered bank account of the particular debenture holder. So, that is the advantage. But on the other hand, if it's going to be a bearer document, no interest will be payable to the account number or etc. The company will inform in its website or in the newspapers that the company will be paying the interest on such and such date. The debenture holder, who is the present holder, will come to the company to prove that he is the owner of the document and he will claim the interest. That is what is called as bearer debenture. The next is redeemable and irredeemable debentures. Those debentures which are repaid after a specific period of time are called as redeemable debentures. And those debentures which will be repaid only in the event of winding up of the company are called as irredeemable debentures. Again, in India, there are no irredeemable debentures at all. All debentures issued in India are redeemable in a span of 10 years' time. Coming to next one is convertible debentures. Convertible debentures are those debentures where the holders have the right to get their holding converted into equity shares or preference shares or fresh class of debentures when most importantly after a specific period of time. After a specific period of time, this has to be noted down very clearly. They cannot convert it anytime they want. They cannot do it today. I buy debentures and tomorrow I'll just get it converted into equity shares or preference shares. Not possible at all. So the company normally has a lock-in period. During that period, the debentures cannot be converted into shares or debentures or new class of preference shares, etc. So the company will specifically say after a specific period of time. So even if it's going to be an objective type question or a question in the board examination asking about what do you mean by convertible debenture, we cannot merely say that those debentures which can be converted are called as convertible debentures. We have to be very clear that those debentures where the holders have the right to get their holding converted into equity shares or preference shares or fresh class of debentures after a specific period of time. That is a very important one. Then what are non-convertible debentures? Obviously those debentures where the option is not given to get their debentures converted into equity shares or preference shares or new class of debentures, they are called as non-convertible debentures. Now you may wonder, why should the company issue debentures and later ask for conversion? Please remember, the debenture holders are the creditors of the company, wherein prefixed rate of interest has to be paid by the company, which means the company's financial risk is always more when the company employs more of borrowed funds. So, when the company wants to reduce its tax liability or the company wants to reduce its interest commitment, the company would prefer to go for conversion of debentures into equity shares, wherein the equity shares do not carry prefixed rate of dividend nor do they need to be paid anything. So the company is under no obligation to meet out any commitment towards the equity shareholders. So when the company wants to exercise the option of overcoming the interest commitment, the company might give the option of getting the debentures converted into equity shares or preference shares. So that is what is called as convertible debentures. So now we have completed convertible and non-convertible debentures. Now we will go to the next type of classification of debentures. Classification of debentures on the basis of coupon rate. Coupon rate is nothing but the rate of interest. Coupon rate is nothing but the rate of interest. When the debentures are issued with a specific rate of interest, then we call it as specific coupon rate interest in debentures. So they carry a prefixed rate of interest. So no problem at all. The debenture holder has a clear idea as to what will be the interest amount that he will be getting. On the other hand, when the debentures are issued with no prefixed rate of interest, they are called as zero coupon rate. They are subject to market factors. For example, Reserve Bank of India bonds. The prevailing rate will be say 7.1%. It may increase or decrease in a span of 6 months. For 6 months, the rate of interest will remain to be the same. Then later it will increase or decrease. But definitely there will be a higher interest than the normal interest payable on the bank deposits and other things. So they are called as coupon rate. So we have completed about the concept of debentures. We shall be now going in for accounting treatment of debentures under various headings. Namaste.